Hi everyone, welcome to another webinar that we're doing today on making tax digital dilemmas. My name's Russell Gammon, I'm the Chief Innovation Officer at Tax Systems. I've been with the business about 10 months or so and joined really to kind of spearhead some exciting new initiatives moving towards the cloud. So we've got lots of different things we'll be talking about today and hopefully you find it interesting. So just covering off the agenda then, what we're going to show you today. We're going to start with the kind of near-term MTD for VAT, looking at the what's going on in 2021, as we're calling it the year of the digital link, looking at that kind of near-term, what you need to do now kind of idea. Then we're moving to a little bit around MTD for corporation tax. So certainly we've had a few updates on that in the last month or so. We'll then talk a little bit around kind of what's changing in tax technology, what's kind of going on in that world. Talking a little bit kind of bigger picture. So really starting in some quite specific things and moving up to kind of 30,000 feet view. And then kind of finally looking at some kind of next steps and practical steps about how we're seeing the kind of industry moving in terms of investing in tax technology. So starting with MTD for VAT. So where are we now? Really, we're at the kind of, I suppose, nearly towards the end of the MTD for VAT journey in a sense, and in that, people have been submitting via the API now for a good amount of time for quite a few filings. That's kind of bedded in, has become business as usual. And again, digital record keeping is not something that's been particularly troublesome for VAT. Most people have kind of got those two requirements, and that's pretty well understood. The one challenge that we still are seeing out there in the market is all around digital links. So this kind of third and final requirement. And I think that is the requirement I'm going to spend most of my time talking about today in terms of what digital links are, what we're kind of seeing out there, and kind of how that's coming into place. Important to note that they are coming in from April 2021, so that the first accounting period from April 2021 onwards. So again, we'll talk you through exactly the timelines for that. So really starting with what is a digital link, and I think, of course, many of you will know this by now, but just to recap, just to make sure, and we're still surprised that some people are coming to us and they're still, not sure, or there's kind of ambiguity. And I totally understand the ambiguity. I think we've had loads of different questions of, does this qualify as a digital link? Does that qualify as a digital link? Some of them are in the grey area, but I think ultimately it's all around data exchange. It's data transfer exchange. And you can see I've got up on screen the HMRC definition. But I think for me, the way that I like to think about this when people ask me is about, it's like going back to school in a way, that it's when you kind of get those maths questions and you get 8 points for the question, and only one of the points is actually for getting the answer right. The other 7 are for kind of showing your workings. It's a bit of a mindset shift. It's to make sure that, you're not just submitting the return to HMRC. It's that actually the steps that you're carrying out to get there are being done correctly with, no kind of manual transposition of data, and we'll talk shortly about what that kind of looks like. But it's really about making sure the data is being transferred from one place to another in a digital way, and that your return is therefore of higher quality than if you were doing things like copying and pasting. In terms of the phase 2 timelines then, so the timelines are around, they start from the 1st of April. So if you're a monthly filer, the first period in scope is 1st of April to the end of April, being filed soon after that, so being filed in early June. And then you've got the kind of quarterly stagger. So if you're on a calendar quarterly, so your standard Q2 will be April to June, you'll then be filing that in August, and then it kind of staggers on from there. So those are the kind of deadline dates that we're looking at. So we'll be seeing anything, the first filings, digitally linked filings, will be kind of out the door anywhere from June through to kind of October of 2021. So depending on when your periods are, that's kind of how that will work. And I guess things to look out for are things that aren't allowed. And I think this is really kind of, some of these things do get into the grey areas, but I think when we look through the list, I mean, copy and pasting and cut and pasting is absolutely not allowed under MTD for VAT. So if you're doing that at the moment, it simply won't be allowed going forward. And I think this is the one that we see happening in processes, people, taking a download and then copy paste it from one place to another. It does happen quite a lot, and therefore that's why that one is pretty much the only kind of black and white area where we say absolutely not allowed to do that. When we look at kind of manually keying items, it will depend. So for example, if you've got a complex partial exemption calculation, HMRC don't expect that to be fully digitally linked. They kind of say that, software won't necessarily be able to get you there, and therefore you can do the partial exemption calculation outside, and you then just need to kind of key that result in. So you are allowed to key values in. But of course, we would kind of advise that you can, wherever possible, to avoid it. We know it's not 100% unavoidable, but we would say, you know, try to avoid manually keying items. Again, it starts to bring risk into the process. Linked cells, so linking values from one place to another in Excel, they are allowed under MTD. And we would kind of advise that generally, you know, whilst they are allowed, there are flaws in that method, and we'll talk you through an example in a moment of kind of what we tend to see. You know, as a business, we've been through well over 100 implementations of VAT software now, taking Excel processes, and we've seen some pretty common themes, and linked cells is one of the areas we do see some errors kind of creeping in. So while they're allowed, they're not necessarily advised. And then macros, again, macros to transpose everything from one place to another, they are allowed. There's an interesting argument we had recently, because of course macros are effectively, in some ways, you can get a macro that just does copying and pasting, and of course copying and pasting is not allowed, but macros are allowed. And you know, by the rules, that is the case. But again, macros, whilst allowed, we would kind of tend to say they're quite high risk, because of course they require upkeep, and of course if there are errors in macros, then they are often quite hard to kind of unpick. You need to have a certain level of skill in things like VBA to be able to unpick them. So again, whilst they are allowed per the rules, they're not necessarily something we would be advising clients to do. So here's an example, and this is the one we see most commonly, particularly for businesses that operate outside of the UK as well as inside the UK, is around reverse charge. So this is an example where we would see someone taking their figures and then kind of adding in data to work out whether or not it's reverse charge. Sometimes that's via some form of lookup, and then they go through and they just key a number in. So manually kind of transposing a figure into a return. Another one that we see happening quite a lot is that, you know, people taking data, downloading it from an ERP system into one sheet, and then kind of taking that and kind of fully copying and pasting that into another place. That is not allowed as well. That's a pretty common area we see, and that's why that's not allowed. And I think one of the points moving on in Excel is that, again, we do see that Excel linking is absolutely allowed, and indeed in a lot of instances people are using that quite a lot in the process. But in practice, we're seeing that it's not necessarily producing correct results, and we need to remember that just because a process is digitally linked, it doesn't necessarily mean it's correct. So here's an example that I've taken from one of our implementations, where effectively what they had is they used a SUMIF to pull values from their ledger. So they would download their ledger into Excel, and then rather than having any kind of copy or paste, they would have a series of SUMIFs that would then go through and sum up the columns. And SUMIFs, of course, are therefore linked cells in Excel and therefore allowed. But what they had was a bit of a weird nuance of their system, where credit notes were posted with the incorrect signage, and therefore they would have a minus sign. And that was kind of a legacy issue with their ERP system. It had just been in the process. You can see up there, there's a minus sign. Now, what had actually happened, and the reason that their results were wrong for a few quarters, was that the ERP team had actually corrected the treatment of credit notes to correct the signage in the system, but they hadn't told the tax team, and therefore the tax team were effectively flipping credit notes back to the wrong way. So they're effectively double counting them the wrong way, and the tax team hadn't been told. It wasn't their fault. But this was a really good example where we went through the process and said, you know what, this process is digitally linked. This would be allowed under MTD phase 2, but actually it doesn't necessarily mean that the result was correct, because they've got that minus sign in there. So I think it's one of the important points that when people are working through their digital links process, and I think a lot of businesses are working through that now, that you're quite careful about things like this, and also being kind of cognizant of the fact that the spreadsheets will require upkeep. There's quite a lot that you need to do to make sure that if things change downstream, that you need to make changes to your Excel. If the VAT calculation changes, you know, we've seen quite recently rules being changed in terms of what goes where in a VAT return because of Brexit. Those kind of things need to be corrected for in Excel. So just a word of caution, I would say that, you know, it's absolutely key that you make sure your Excel spreadsheets are digitally linked, but it's also really important to make sure that they are correct as well. So yeah, it's that upkeep point that we would say is important. So can businesses defer MTD? This is a question we still get quite a lot. You know, can we do it because of COVID and Brexit? I think there are a few different examples, and we know that there is an official kind of deferral process. I would probably say that we're a bit late in the process now, to be honest. If you're applying now, I think it's quite unlikely. I would also say from a practical basis, we've only heard of a handful of kind of approvals for this. And, you know, the main examples we see where people are getting them is around kind of, you know, ERP projects. So I'm, you know, a client saying, look, we knew about digital links a couple of years ago. We've gone through a big project at great expense to bring in an ERP system that will fix this. But that ERP project is running long and we won't be able to get it done in time. Look, you know, that is an instance where I think HMRC will be a bit lenient and say, you know, you might get a couple of quarters where you don't need to have digital links in place because you're doing this big project. But you do, firstly, remember you have to apply and get it approved. But secondly, that kind of application process is reasonably involved. It's not just a case of asking nicely. You have to kind of provide a number of different pieces of information about when you'll get it fixed, the kind of efforts you're putting in place, the kind of controls that you'll have in place in the meantime to make sure you're not getting things wrong. So in most instances, we've tended to see the advice is it's just easier to comply with the digital links requirement than to try and get a deferral. And then the other question we've had a lot recently is, will HMRC defer? You know, we've already seen that COVID has delayed a lot of different requirements across tax. And therefore, you know, there's been some expectation, particularly maybe a month or two ago, that we, you know, are we going to see it bumped back another 6 months or 12 months or anything? Now, digital links, as you may know, has already been moved back. We've already had a delay of either 6 or 12 months, depending on if you're a group or a solo filer. You know, when I put these slides together, we were saying for effectively, we believe there are no plans for further postponement. We actually did a webinar with HMRC just yesterday, and they, again, HMRC reiterated that there are no plans for a postponement, and whilst they can't say 100%, you know, it was very, very strong wording to say that this is not going to be delayed again. So I think any kind of expectation is pretty much zero at this point. The digital links requirement will be coming in from 1st of April this year, and it won't get postponed. And I think the last point really on digital links on this particular point was that, you know, if you're kind of querying now whether you can kind of get away and it might be postponed and you might get out of it, it might already be almost too late, because digital links, depending on your business, depending on your complexity and your source systems, is potentially a much bigger challenge. It's that kind of tip of the iceberg. Phase 1 was tip of the iceberg, and digital links is quite a large amount of work potentially lurking below. So it's really important that if you haven't started looking at this already in earnest, and we know that businesses have been really busy in the first couple of months of the year. You know, a lot of businesses have had financial year ends, and everyone or nearly everyone's been dealing with Brexit in some way, shape or form. And of course, COVID and remote working doesn't help either. But certainly if you haven't started looking at digital links now, it really is getting to that pinch point where you need to look at them really sooner rather than later to make sure that you're compliant. I don't think there's any kind of other sensible route out of that at the minute. So what do we need to do this year? And this is our kind of advice for different types of business. So we kind of started, when we were talking to different clients, talking about different kind of risk groups and kind of bucketing people into kind of almost a kind of a lower, medium and a high risk, depending on kind of the complexity of the business. So you can see that from the kind of the left to right, that kind of complexity builds. So, you know, if you've got multiple entities, that always adds complexity. If you've got those entities rolling into groups as well, that always provides a level of complexity when you're trying to do these processes in Excel, because there's not just the individual calculations, but that kind of roll up. ERP systems invariably add additional complexity because you've got to get different data in different formats at different times from different teams. It can be very, very complicated. And of course, adjustments is an area within VAT that, you know, again, can add a lot of overhead and also a lot of complexity into the process. And then finally, we see anything from a low level of use of Excel through to, you know, entire processes that are run on Excel, and indeed multiple workbooks with, you know, instruction manuals that run into the 10, 20, 30 pages. So we see all sorts of things depending on things. And I think where we've fallen down, or where we've fallen with our clients, is that, you know, if you're that kind of low risk business where maybe you're running your business on a Xero or a QuickBooks or a Sage, and you don't really have much in the way of complexity with VAT, then absolutely the best way to do this is to, you know, either use it all in one system. If you are simple enough to just use Xero for your VAT returns, for example, and that's absolutely the way to go. And if not, then typically from a kind of cost benefit analysis point of view, it can be, you know, the most cost effective way is typically to use a very basic Excel and a bridging piece of software. You know, there are bridging tools out there that are very, very cheap, or indeed some of them are free, although come with no support typically. So we would always advise buying something just to make sure that if something does go wrong on submission day, you've got a kind of a fallback to make sure that you can do something. But ultimately, bridging software is the way to go. I think when we then move into medium risk and we deal with businesses that have got a bit more complexity in the process, then we do see that dedicated software tends to outweigh Excel in terms of cost benefit. And even if people are using Excel, it tends to be more of a short to medium term kind of situation. We certainly don't see that those businesses can operate in Excel in a risk efficient way for a long period of time. And certainly when we get to high risk, I mean, a lot of businesses that would be in this high risk category have already made the choice to move to a dedicated kind of compliance tool in this area. So that was the main bit on MTD for VAT. I think that's the area that a lot of clients are focusing on in the immediate term, because, as I said, there's a lot going on. And even, talking to the market, lots of people have, gone and got an approach, or they've worked out what they might do, but I would still say over half of the market still haven't made a firm decision as to this is how we're going to deal with it, and this is what we're going to do, and making sure they've got everything down and documented. So I think that's an important thing for us to get right as an industry over the next couple of months as we move from kind of theory into practice and execution on this particular piece. Moving on then, so MTD for corporation tax, and I did a few webinars last year when we were kind of expecting an announcement and we haven't received anything. So this is kind of news to a lot of people still. I think a lot of people have seen that something arrived and haven't really done anything with that information. So hopefully this will be quite useful. But what are the timelines? Well, we've got a consultation document in December of 2020, and the responses are due by the 5th of March, so just in the very, very short future. And those consultation responses will take HMRC a while to digest, and then they're quite vague about the kind of, when we're going to get legislation or further consultation on that sort of thing. But what they have said is that it won't be mandatory before 2026, from April 2026, which is, of course, quite a long way off. And with voluntary submissions no earlier than 2 years before that. And again, when these things are voluntary and mandatory, we always do see that people will do voluntary submissions. It's not the case that it's just a nice to have. There are good reasons for doing voluntary submissions, but certainly the kind of main date when they'll kind of turn on the taps will be 2026. And it does seem like a long way off, and I think 2026 is a long way off in many ways, but the changes are quite far reaching. So MTD for VAT has absolutely brought in a change in kind of thinking and submission mechanisms and way of doing it, but it hasn't been a sort of fundamental overhaul to compliance, if you like. It's been a challenge, and depending on complexity of organisation and finance systems and all the rest of it, it's been harder for some than for others. But MTD for corporation tax is going to be universally quite tricky for a lot of businesses. So in terms of what's being proposed, so what is being proposed? Okay, running through the few different bits. So who's it affecting? So all the companies currently subject to corporation tax, apart from the 2,000 or so businesses that fall into the very large QIP scheme. And I think the rationale behind that is that the companies in the very large QIP scheme are already doing quarterly submissions of information and quarterly payments and things of that nature, and they tend to have a CRM, a kind of contact within HMRC, and therefore they're already providing a lot more information than just a typical kind of annual corporation taxpayer. I've covered the timeline, and one of the things that really does stand out is that the digital records and digital links requirement both make their way into the consultation. And the digital links part for VAT, again, as I've kind of already talked about, has been very tricky for some people, depending on processes, depending on finance systems. But for corporation tax at the moment, the amount of manual intervention is absolutely massive. And therefore, a digital links requirement across corporation tax is huge. It provides a massive difference in the way that people need to approach this. And, as I said, we've got time, but also it's a fundamental shift in kind of that process. So I do expect some feedback on the digital links part. What is it? It's a quarterly report of accounting data. The data being 28 different categories. It doesn't line up 100% to the detailed profit and loss that you have in the current day corporation tax process. And of course, this is of course all subject to consultation, and therefore is subject to change, of course. So this is what's in that consultation right now. Of course, these things could change by the time they come to light, but it's a quarterly report, and the quarterly report being done 1 month after quarter end. So 30th of the month typically, or thereabouts. And then annually, on an annual basis, you'll be doing a kind of true up So the kind of quarterly submissions roll up into an annual submission as well. And another big change in the consultation is they ask questions around proposing a reduction of the timetable from 12 months to 9 months to align it to the stat accounts process, which again is absolutely massive for some people, because of course in a lot of instances we see that people will use their stat accounts as the source kind of file for their corporation tax, and of course if they've got the same deadline, then it's going to be very tricky to use that information as the start point. I pulled this slide together to make you to try and make it a bit more visual about what the changes are. So if you look at the top bit, that's the kind of at present what you do with your corporation tax return. For an unlisted business, you submit it by, if you're a calendar year end, a December year end, you'd submit your stat accounts at the end of September, and then your CT return goes in by the end of December. What's being proposed is that if you look at the filing schedule for a particular year, you'll be doing, at the end of January, you'll be doing the Q4 filing for the prior year, and then you'll be doing your stat accounts and your CT annual in that September. But you've also got the quarterly filings that are kind of bouncing along. So you've got a significant uptick in information. And I think one of the big drivers for this with HMRC was that, and that's kind of demonstrated at the bottom, is that they're really not getting access to data soon enough. So if, for example, a company makes a profit in Q1 or do something in Q1, that's not getting reported until 18 months later in the accounts and 21 months later in the CT return. And their take on it is that information needs to get to them sooner. So now, if we make a profit in Q1 of 1 year, that's being reported just 1 month later rather than 18 or 21. So it's a massive acceleration in how quickly HMRC get their hands on the data. And I think that is the main driver behind what they're doing here. But of course, that means a massive change for businesses who don't have that time window at all anymore. So hopefully this kind of brings home just how big some of these changes that they've put on the table are, and what that might mean for business. And what does it mean for business? Well, as I've just said, HMRC getting that relevant data much sooner than they are currently doing. And of course, an alignment of the stat and the CT window means that if that does happen, then those two processes have to be much more tightly coupled. They have to be much more integrated than they are at the moment, because in a lot of instances, we find that at the moment, they just aren't integrated at all. It will no doubt result in an increase in workload for in-house teams and compliance outsourcers. There's no way around that, unless we the technology landscape moves on. Digital records and digital links particularly being a big aspect for CT, but of course, digital records still being a more material change for corporation tax because of the way it's done at the moment. And the final one is there are a few questions around IXBRL, alluding to the fact that the quality across the board of IXBRL data generally is perceived to be not that good. There certainly is some very good quality IXBRL out there, but across all of the filings they get, I think HMRC would like that quality to be higher. So this is a consultation. We are still very early days, but it is certainly something to think about, something to consider, and something to watch for as we go over the next year or two to see how much changes. And of course, we don't have much time to file responses to the consultation anymore. We as a business absolutely will be, but it's important to make sure you're kind of dialed into these discussions because they are quite meaningful. So moving on then from making tax digital and trying to take sort of a really high level view, what's the kind of the bigger picture and what's kind of changing? And when I kind of pulled some of this together, I took a bit of a step back and said, well, what are the kind of macro factors that are driving this? And to me, I think there are three things. Firstly, HMRC have a massive gap to fill. And I pulled this graph out of one of HMRC's documents quite recently in terms of their tax receipts compared to the previous quarter. And across the board, apart from a small bit in tobacco, tax take is massively down compared to the previous period. And I think that's important to note. It won't come as a surprise to many people, but ultimately HMRC have been taking in less tax and spending out an absolute fortune more. So we've got Rishi Sunak's budget on the 3rd. I think that's by the time this broadcast will actually be the day before this, so it'll feel a bit weird because the budget will have come by the time you actually get to hear me say this, but ultimately that's going to be a big sign of things to come. HMRC have a massive gap to fill. Also, COVID has accelerated the use of technology. So, for example, we are seeing a much quicker adoption of digital interactions. I think the graph on the right-hand side will kind of give you the real feel for where we're going. And all these graphs were taken from a McKinsey report saying that previously organizational changes were, if we look at, for example, the line there around moving things to the cloud, so increasing migration of assets to the cloud, previously that was taking 547 days on average. Since COVID, that's been down to 23 days on average. So we're seeing a massive acceleration in adoption of kind of technology, and also those changes are here to stay. And of course, now with the vaccine, we do have kind of that light at the end of the tunnel, which is fantastic. But I think we're all accepting now that we're not going to be going back to the world that we had 18 months or so ago. There will be some kind of lasting changes as a result of COVID. And finally, I think technology is absolutely moving forward. If you look at the technology that's available now, even compared to 3 years ago or 5 years ago, we are significantly further forward than we were. And even technology that 5 years ago might have existed was often kind of prohibitively expensive. And now things are getting much cheaper. If you look at the the ability for things like Microsoft and Google and their AI capabilities, they are significantly better than they were, and they're a lot cheaper and a lot more readily available and a lot better understood. So what does that give us? This is kind of a summary slide. We've got this kind of perfect storm from a tax technology point of view. We've got HMRC looking to drive out more of that kind of tax revenue, and I think the tax gap being £34 billion of effectively unrecovered money by HMRC, they kind of are seeing making tax digital as a big driver to get some of that back, because that's money that they're owed. And that kind of the key point around being the kind of the failure to take reasonable care, and that's what MTD is trying to address. You've got HMRC driving things. You've got COVID kind of making technology adoption push forward, and you've got the availability of the technology as well being kind of just more readily available than it was. And therefore, what we kind of did as a business is we went away and we kind of tried to think about how does our client base fit into this. And we came up with what we're calling our kind of maturity model. And this is kind of what it looks like. We've got a number of different areas that clients will fit into. So we kind of are seeing from the left to the right, we've got clients sort of moving on from where we are now. So a lot of businesses are over on that kind of left-hand side where they kind of treat CT and VAT and FATCA and XBRL and transfer pricing, whatever they might do, as a separate kind of entity, separate things, and then separate processes with separate bits of technology and a lot of Excel and a lot of manual rework. We see a lot of businesses in that space. But we are seeing more and more people wanting to drive further to the right. And what we're not saying is that loads of businesses are over at the extreme right-hand side doing loads and loads of stuff with tax technology. We are not there yet. But we are seeing people wanting to move up that chain to say, okay, how can we map data in from our ERP system in a more kind of streamlined fashion, from a trial balance or a general ledger? How can we kind of tie things in with our stats account process? And of course, MTD for corporation tax will drive that adoption even further. We're also seeing demand for kind of compliance workflows and a consistent way of signing off. I think it was really interesting to see when the pandemic hit, people having to move away from paper-based sign-offs, because paper-based sign-offs still happened quite a lot in tax and still do a little bit, but people have had to move to DocuSign or Adobe Sign. It's just had to go that way. So COVID has pushed people along that line as well, but also integration into workflow suites. And I think finally people are starting to look at some of those kind of analytics. How can we kind of manage our ETR better? How can we manage our reliefs better to make sure that we're getting what we can? So we are starting to see businesses mature and move from the left to the right. I think what we're seeing down at the bottom is, of course, a move, almost explicitly away from desktop technology to cloud technology, for obvious reasons, and from a kind of a standalone process point of view to an integrated platform. Human insight will always kind of rule in tax for a very long time, but we're starting to see machines giving back some of that insight to kind of tax functions to take that further. And then I think security had often been seen as kind of a second fiddle, I suppose, and actually security now is just baked into any kind of technology conversation. Things that 1 or 2 years ago, things like single sign-on or Active Directory were, do you have that and we can work around it if you don't. They are now absolutely things that systems have to have for them to be relevant in the market. So there, change is absolutely happening, and we're seeing people move from left to right. What's our take on this? Well, this is our kind of view around our digital compliance platform. It's called Alpha Tax 360 that we're doing, which is around, it's a SaaS-based platform that's with things like single sign-on and security kind of baked into it. And we see these kind of 4 layers. So tax applications being the calculators to kind of work out your corporation tax, your VAT. So we've got our Alpha CT product, we've got our Alpha VAT product. So the kind of actual kind of tax logic layer. We've then got things like tax data that can streamline data from source, tax operations to kind of manage that function, and then tax insights, things like our analytics platform to look into that data and to see kind of what's going on. So lots going on in this space of tax systems. You've also got all the services down below. We continue to offer lots of different services, and we will see those kind of continuing for the foreseeable future. But I think people's viewpoints are starting to change in tax technology, which has been quite an interesting look into the market. So finally, what to kind of do now? So one of the things we get asked a lot is, this is all great and we like the vision and we like the theory, but how do we put this into kind of action in our tax department? So what are we kind of seeing out there, firstly, at the moment in terms of our kind of day-to-day? I think back to the start of the presentation, really, we are seeing a massive focus on that automation. We're seeing a lot of people wanting to do work in Excel some of the time, but also moving towards more kind of compliance-driven systems. So that has been something that's been kind of pretty consistently asked for, really from quarter 3, quarter 4 last year and into Q1 now. We're continuing to ramp up and seeing a lot more and more interest in people kind of doing that, which is great. And people are looking at that kind of Excel process to say, how can we do this better? We don't just want to kind of do a sticky plaster and keep using Excel. How can we kind of change that? And lots of good conversations. We also do see quite a lot in the market around RPA, using tools such as Alteryx to kind of automate Excel processes. And again, there are definitely some efficiencies to be had there and automations in things like RPA. So we are seeing people wanting to kind of, can we kind of update our fixed asset process to cut out days worth of time from the process. So we are seeing those sort of things happen. We have had 3 or 4 detailed conversations around MTD for CT. Which kind of surprised me. They've come very, very quickly. People wanting to go, do you know what are your plans? What are you doing? How can you help us? What do we need to change? And it's been really, really kind of refreshing, actually, that people haven't just looked at that requirement and gone, oh, we can think about that in a year or two. They're actually wanting to understand where we're going for it now. So that's great. And the other thing that we're seeing a lot more of, actually, in the last maybe 6 to 9 months is around APIs. So the ability for tools to kind of talk to each other in a more cohesive way. And this is something that, throughout the finance department happens in a lot of places, but probably tax lags a little bit behind. So we're seeing that come up more. Can we take our tool that we use to extract information from our source systems, and can we push it into Alpha Tax, for example? So we're seeing a lot more of those conversations come out, which is really interesting. And then finally, really, what's a practical plan of attack? Because again, there's no point thinking about this just in a theoretical point of view. How do we actually see people getting out there? So ultimately, I think the first step is really to kind of analyze what you're doing, to kind of critically assess what you're doing, have a look at your processes and say, do you know what, we could go over there and do a kind of a sticky plaster and fix this for the next 6 months, 9 months, maybe a year. But maybe are there areas where, do you know what, you could benefit from more kind of fundamental reform? And kind of, maybe pick the top 1, 2, 3 areas that, that your tax function is weakest in. Then kind of form that strategy. So form that tax strategy and say, do you know what, we believe that we can get benefits. And this is all around building a business case. And we've seen several examples where we've kind of worked with our customers to say, well, let's look at this. Let's work on the ROI. How much can you benefit the organization from doing that? And I think it's really important at this stage to get senior buy-in. You have to get somebody senior in the organization to understand why you're doing this and benefit from it, because ultimately, we typically see that some people are going to need, maybe the CFO to sign off the check, and therefore you want to get them involved nice and early in the process. Assessing the market. I mean, the tax technology market's moved on a lot in the last 12 months and 24 months from a market where there were maybe a few vendors. There are certainly more vendors out there, and indeed vendors that have been around a long time. I mean, tax systems have been around for nearly 30 years, and the kind of technology we've got on offer today is compared to even 12 months ago is massively different. So go and have a look at the market, see what's out there, and pick your vendors. It doesn't have to be one vendor. We are seeing some people wanting to go down that one vendor route, but in a lot of instances, people are saying, we like this product, we want to use that product, so how can we build a process around that? So it's kind of looking at those technologies and making sure that they kind of work nicely together. And then really the final point is, all of this and what I've talked about today is typically about compliance with an MTD mandate, compliance with making sure you get your CT returns and your VAT returns done and get them on time and get them done correctly. But actually, if you think about the information that you're seeing, particularly on the corporation tax side, but as well on the VAT side, that some of these figures, once they've kind of gone through that tax process, are tax sensitized, and they are quite valuable to the business, and they don't exist anywhere else. They don't exist kind of upstream in the ERP systems, because in the ERP systems, you've only got that kind of finance view. So when you've got that data in one place, again, technology's moved on such that you should really be able to do something with it to kind of get a bit more insight from that data. So again, don't just think about this from a point of view of, well, I need to comply with a certain rule by a certain time. Yes, absolutely, that is something that that businesses need to make sure they do, but think about it a bit more broadly than that. So can we do something a bit more? So that was it from me today. Thank you very much for your time, and of course, I'm very happy to take your questions. Thank you very much. Hello. So going to ask, there were quite a few questions that came in, which is great. Going to answer some of them now, and also if you've got any more questions, feel free to just type them into the chat. I've got a few, but very happy to take as many as you have. So the first question that came in is a pretty standard question. We get this quite a lot. You know, in terms of evidence of compliance with digital links, does this mean we have to kind of show every step of our calculation? It's something, you know, first and foremost, it doesn't change your submission mechanism, right? You still are submitting the 9 boxes through to HMRC, so you're not submitting any additional information. That's important to note. But I think certainly the requirement is that you need to be able to evidence that if asked. It's kind of, think of it as an audit requirement. You know, HMRC could come in and say, okay, you've submitted, this is your VAT return for the last couple of quarters. Please can you prove why those figures are those figures? So that's an important step. So I think what we've seen people doing in practice is, you know, if they're using software, great, because software kind of, you know, takes that burden on for them. If not, they're having to kind of document it in a Word document, a process document. Of course, that needs to be kept up to date, but certainly you need to think about that just to make sure that you're kind of, you know, fully compliant, and also ready if there is kind of an investigation or anything of that nature. The kind of $1 million question that came in, and we get this in different guises pretty much every webinar we do. We did a webinar a couple of weeks ago with HMRC, and we got this question, I think, more than 15 times in various different formats. Will my software from 2019, will the software from today be compliant with the new phase 2 digital links requirement? And the answer really is it depends. So for some, you know, you can use Excel and a bridging tool from your ERP system that can be compliant. It would depend on your complexity as to whether you are or you are not compliant. For you know, sort of small micro businesses, we do tend to see that they will be pretty compliant. But as soon as you get up to any kind of level of complexity, additional entities, additional things, you know, additional ERP systems or adjustments, things like that, then quite quickly, whilst you can be compliant using your existing product, you might well not be, and therefore you need to think about, do I need to make changes in that product? Do I need to go and have a look at another product? Do I need to do some more work in Excel? There's a variety of different options. Certainly, you know, it's one of those big, it depends questions, and it's always, you know, if you've got a specific question, we're always very happy to take a look and kind of give you our view. So the next question, we keep having to invest in new software, first for 2019, now for digital links. Will this happen again when MTD is extended to other taxes? And I think it's one of those questions where, you know, certainly the requirements are getting, you know, they're increasing, and they will continue to increase, whether it's MTD, we can see obviously VATs happening now, we've got income tax, we're going to have CT down the road. You will need to make changes in technology to cater for them, because the requirements will require additional kind of use of technology. So I think, you know, the short answer is, unfortunately for businesses, yes, I would expect to continue kind of trail where you need to make sure that you're doing new and different things to make sure that you're compliant. I think certainly the view that we've taken, that hopefully was conveyed in the webinar, was that, you know, more of a kind of a platform view, that there is actually one way of kind of managing all these things in one place, rather than viewing them as kind of siloed requirements, one for VAT, one for you know, different areas, one for CT, that actually you know, you can combat them with one particular platform. So that, you know, that's generally our view. The next question, why is it that some processes are covered under MTD and some aren't? We have a partial exemption, and my understanding is I don't have to digitally calculations at this point, but it might change over the next few years. So effectively, the reason that they are not in scope, and partial exemption is a great example, is because quite simply they are too complicated. And HMRC took the view that requiring, for example, a full end-to-end partial exemption calculation would be, you know, requiring that to be digitally linked would be quite extreme, quite costly for particularly, you know, institutions where, you know, banks and similar businesses that have those partial exemptions. And there are, you know, other businesses, for example, higher education, where they won't tend to have large budgets for kind of technology projects, but certainly they've got very, very complicated partial exemption calculations, and therefore that would be quite onerous on those kind of businesses. So what they effectively said is that you need to be able to get those results into your overall MTD calculation, but you don't have to digitally link that part of the process. Now, will that kind of come into scope over the next few years? We don't know. We haven't heard or seen anything from HMRC that would lead us to believe that at this point. But ultimately, I guess there's 2 points really. The first being is that it could come down the line. We just don't know when. Thus, the second one being is that outside of purely compliance with HMRC, there are lots of benefits to doing a process to automate your parcel exemption. Time saving. Making sure you're accurate and things like that. So we get into the realms of, you don't need to do it to be compliant, but you might well want to do it for kind of very solid business reasons. The next question was a similar one, like what Ellie said, are we going to have to continue to invest in multiple, we've had to already invest in multiple software multiple times now. Is the expense going to continue as MTD expands? And I think, as I've kind of said already, you will need to continue to have technology that makes sure that you're compliant with these things, but at the same time, we do think that the technology market is itself moving on to meet. That means you can kind of provide these, you can kind of provide the filings in a cost-efficient manner, and it's not just a case of continually adding cost. I think I'll be a bit more optimistic than that. And the final question: will software technology keep pace with short-term changes, to VAT, i.e., low percentages, VAT holidays, sector-specific changes? Yes, it's a great example. Yesterday, we saw we had the budget, and we saw that there was the new approach to VAT in the hospitality sector of continuing the 5% rate, but then moving to a 12.5% rate before returning to 20% next year. And that's a great example where software will require updates. Depending on your approach, depending if you do it in the ERP or if you do it in a VAT calculation or wherever you're doing that. But ultimately, that will require changes if you are in one of those kind of effective industries. And I think that the answer is that, if you buy a software product for that, then you would expect it to keep pace with those changes. So you would expect that the calculation is included in your kind of license fee, which I think is a key reason for buying them. Obviously, if you're using Excel, then that's something you're going to need to maintain yourself and do it yourself. So again, it's another kind of key reason why people are starting to use technology a lot more in the VAT sector rather than simply relying on Excel. So those were all the questions that came in throughout. I'll just wait for sort of 30 seconds more in case anyone else has got a question. Otherwise, I will give you a few minutes back in your day. Excellent. Well, I think we will call it a day there. Thank you very much for dialing in. I really appreciate your time, and see you soon.